Hello everyone, welcome back to our auto accounting series. In this video, I'm going to discuss what is the Stono accounting and how we can use this Stono accounting configurations in auto accounting module. Stono accounting is one of the most important type in auto accounting module. So what is the Stono accounting? What its definition is? Stono accounting is a method used to reverse accounting entries by posting transaction with negative amounts with a negative sign. So what is the basically this approach maintains a clear audit trail, allowing both the original and reversing entries to be visible, which is essential for transparency and accuracy in financial records. So use of Stono accounting in Auto 18, error correction, transparency, and compliance with accounting standards. So let's dig into Auto accounting module and let's find how this Stono accounting can help us in Auto accounting module. So first, we'll go into the auto accounting, our ERP system, auto ERP system, search for auto accounting module. In configurations, in settings, I'll search for the Stono accounting, ST. Here you can find the Stono accounting configurations in settings, in accounting settings. So in my case, this configuration is already checked, and it's mean this configuration is enabled in my auto accounting module. So let's see with the example how this configurations can help us, and without this configuration what impact will come into our file, in our reporting and in our transactions. So this configuration is enabled. So I'll go into my customer and then invoices. I'll create a new invoice for a testing purpose. So I'll select a dummy customer here, deco edit, and I'll select a product here, and I say this is the store. Is blue store, dark blue store is our product which we are going to sell to our customer. So this product actual price is 500, and I'll save and confirm this. And for example, after confirming the invoice, you realize that the price of this invoice is not correct, or maybe and there is another option that maybe your customer said no, we are not going to move with this invoice, we are not going to purchase this invoice, are going to purchase this product anymore. So what is the best way? We will add a credit note for this to reverse the entries rather than deleting entries into our now into our journal entries. So what I'll do, I'll click on to credit note. In credit note, I'll define, for example, we are going to refund because customer do not want to proceed. So this is our reason for credit note, and I'll create a reverse entry for it. When I'll create a reverse entry, system automatically pop up a screen for me for a reverse entry screen, which is basically in the draft state. So in journal items, you can see this is now, which is this is now to go. This is showing into the minus sign. Actually, if I go back into my invoice, if I go into the journal items, you see when I confirm the invoice, the journal entries are showing here $500 onto the credit side and $500 on debit side. It means product sales is going to decrease. Like this is basically uh, product sales expense by nature. So whenever it will increase, so it will show entries onto the credit side. So let's check into the product sale. Let me define this with the example so you can get a proper idea how these transactions are working here. So in our configurations in chart of accounts, if I search for sale, so product sale is basically income account. So I discussed this in my previous videos that actually transactions, these are different types. This is the different kinds of accounting into the which we are using, different types which we are using into auto accounting module or any accounting system. So it impact on our transaction. So in our case, in our this invoice, if we simply learn that in this product sale account, when we are going to sell something, it means this account value is being increased. But by nature, due to its nature income, whenever the income account increase, the transaction will post on the credit side. Whenever it will decrease, the transactions will be post onto the debit side. So if I look into this is income account, and because we are selling something, it means transaction will increase, the value of that chart of accounts will increase. So transaction is posted onto the credit side. Means this is something which is going to decrease from, when we are selling something, it means it is going to decrease from our warehouse. So it is another reason that the value is showing onto the credit side. And this is account receivable, because we are going to receive something, and account receivable is assets by nature. And when assets increase, the value is shown to the debit side, transaction shows on to the debit side. When it will decrease, it will show on to the credit side. So in this case, our account receivable account is increasing, and it will show it is showing the transaction onto the debit side. So when I go into my entry, like when I confirm the invoices, the transactions, you can see how these transactions are being affect onto credit and debit side. So when I go into the my reverse entry, when I go into our credit notes, and this is our credit note which is in draft side. So if you go into the journal items, you can see the system is showing the values into the negative side, and into with the negative signs. Means now our product sales, which we already sell, which increase at that time when we sell items to our customers, and the account receivable, which also increase when we sell our items to the customer. Now this is showing with the negative sign, that this is being a decrease again. Means these values are being resetting, reversing again with the negative sign. So I confirm this, and I go into the accounting and journal entries. In journal entries, you can find this invoice. If I search for this invoice, and you see this, with this invoice, it is showing the 500 into the positive and 500 into the negative. Means this is this transactions which posted again this invoice, now being reversing with the minus sign here. Also, if I go into our reporting, this is main feature why we use Stono accounting. So if I go into the general ledgers, in general ledgers I select the invoices, vendor bills, point of sales, expense, customer invoices. So in customer invoices, you can see this is account receivable account. So if we look into here, so that was our invoice, which is system is showing. Okay, so 500 is debited on the, when we sell something, we have to receive this 500 into our account receivable account. But again, when we look into the other side, there is the reverse entry of that invoice 008, and this time this is showing with the negative sign here, negative $500. So whenever our account teams look into the journal ledger, it they can automatically realize, okay, so this is the reverse entry basically. So they can more investigate, okay, so this reverse entry is basically related to that invoice. So they can easily find with the negative, with the sign, with the help of this negative and red sign, they can easily find, okay, so this entry is the basically the our credit note entry. And this feature can help them with the reporting purpose and audit purpose. As we look into our definition, it helps into the error corrections. If an incorrect transaction is recorded, Stono accounting allows for its reversal without deleting the original entry. Means it with the negative signs, with the red signs, we can easily understand, okay, so this is our credit note, this is our reverse entry.